Hi, this is Alessio, Rastani, leading trader. Hope you're well, and welcome to this update on Bitcoin. Now, in my previous video on Bitcoin, I said I was not going to produce another update on Bitcoin until I was back from holiday. So the reason I'm making this video while I'm on vacation is because I want to make a very important point in this video that I think you'll learn from, and I think it'll really benefit you. So I want to take a look at the Bitcoin market quite briefly and just go back over some of the stuff we mentioned in the previous video. So in the previous video, which is this one here, and as you can see, I said if you're afraid of Bitcoin dropping, then don't be. Bitcoin is crashing again. Why I'm not worried. That was the video I'm talking about. And in that video, here's what I said. In that video, I showed these key levels on the market, which essentially are the Fibonacci levels. And really what I was saying was that as Bitcoin is dropping, it could come down to this level here, the 61.8% retracement, called the golden ratio. But essentially I said, look, if it comes down to these levels, then watch out, because buyers are likely to step in and essentially push Bitcoin back higher. In fact, as you can see here, that was the key level I showed on my chart, which I'll show you right now on the live charts in a few moments. But if you just take a look at the market, the Bitcoin market right now as we speak, you'll see that actually nothing has much changed. If we just go back, just recap here, that low you see there, the February 6th panic lows, the reason why I call it a panic lows is because that's the low it made after that huge drop that we had since December. Now, if we just zoom in here and just take a look at this, what we're going to do is just recap on this one more time, just to show you this. I'm going to get this indicator on my chart, and it's called Fibonacci retracement. Going to draw from, so left click and draw from the low to the high. Okay, now just take a look at the Bitcoin chart right there as I'm looking at it right now, and you will see that really nothing has changed since my analysis. In fact, the Bitcoin market has respected this key level, and that's one of the things I love about Bitcoin, as well as other markets like Forex as well. But Bitcoin really loves respecting these key technical levels, these chart levels, like the 61.8% Fibonacci level here. Take a look at this. I mean, Bitcoin came down here, it may have come down below that level, doesn't matter, but look what happened just afterwards. Buyers stepped in as we expected, and they pushed Bitcoin now higher. In fact, we're now above the 50% level there. Okay, so as you can see, and as I said in my video last week, I was not worried about Bitcoin dropping. And let me ask you, what really has changed since the analysis I made in my previous video? Nothing. Absolutely nothing. And I want to actually bring this point up because it's so important. There are many people out there who want to produce daily or hourly by hour updates on Bitcoin. Let me just say one thing. If there's one thing you will learn, and one thing I learned personally in my experience, that constant analysis of a market actually will do you more harm. All right? If you do constant daily or hour by hour updates of a market, all right, you might think that's actually helping you, but it's not. In the market, in the real world of trading analysis and market analysis, less is more. Remember that, less is more. The reason is this. Unfortunately, nobody really talks about this, but it's important to mention it because a lot of what happens in the markets is just random noise. About a couple of years ago, I had a great opportunity to talk to a fantastic trader. Her name is Linda Raschke. If you haven't read the chapter in the book, Market Wizards, go and do so. In the book, Market Wizards by Jack Schwager, Linda Raschke says some fantastic stuff, and I interviewed her about it, and she said that a lot of market activity is just noise, random noise. It is not meaningful. So if you think that every single bar on a market is going to give you information, well, guess what? It doesn't. In fact, a lot of what happens in the market day by day, so a lot of what you see here in the market is just noise. It's randomness. It's meaningless noise. So what I would highly recommend after you watch this video is mark the points on the charts, mark the levels, and just put away the charts. Move away from the market, move away from the chart, and just let the market do what it wants. At the end of the day, either the market's going to respect those levels or it's not. And then we're going to learn more information. So that's why I don't like the idea of producing daily or hour by hour updates, which, remember, they work against you. It's counterintuitive. Less is more, and actually you're more likely to remain objective and not too emotionally attached to a market if you do it that way. If you distance yourself from the markets at least for a week and not look at it. That's one of the reasons why I said I'm not going to produce any videos on Bitcoin while I'm on holiday, because you really need that distance to give you that objective state of mind. So as I said in my last video, we came down to the 61.8% Fibonacci level here. We've held this level really nicely, as you can see here. We've bounced from it. And let me just show you a few more things here. Let me just bring this down to a 4-hour time frame because I want to show you something really interesting. Take a look at this. This is a 4-hour time frame of Bitcoin. Now, if I just zoom in here, now take a look at this right down on this chart. Look at that cluster of time resistance. All right. Now, this indicator I have at the bottom here is one of my own indicators called LT time clusters. Okay, you see these? And where this is meaningful is when you see a clustering effect of time cycles. So individually by themselves, they're not that meaningful. So these single time cycles are not all that meaningful. What is meaningful is when you see a clustering effect like that. Okay, you see that? That's a cluster of time resistance or time cycles. And look at that. As Bitcoin hit that cluster, let me just zoom in a little bit. Come forward. Look at this. Bitcoin falls into the 61.8% Fibonacci level. That's a level of support, and then also meets this wall of time resistance. Okay, this is the time resistance cycles, or indeed clustering effect of time resistance. And you can see what it did then. It then pushed Bitcoin in the opposite direction. One of the reasons I use these time clusters and why I developed in the first place is because you really need to be looking at both axes on the chart. You got the price axis on the right here, and you got the time axis on the bottom here. All right, so it really is helpful to look at both these axes on the chart. So we got that, but look at this. If you just zoom out a little bit, you will see we have this. Let me just remove these Fibonacci levels there. Okay, now look at the chart right there, and look at those red horizontal lines. This is the market profile indicator that I developed here. The market profile indicator is very useful because it shows you where there's been a lot of buying or selling activity. The thicker those lines are, basically the thickness shows the volume of activity that's been happening. So what that thick red line is telling us right there at the top near Bitcoin at 11,700 is saying there's a lot of selling activity happened there. So whenever Bitcoin got to these levels, like these levels here and these levels here, there was a lot of selling activity. Sellers were in control at that market, heavily in control. So guess what? Bitcoin really needs to get above that level before we can say it's in the clear. As long as we're below these thick levels you see here near the 11,740 level, then guess what? We're still seeing selling pressure. All right. But the good news is this. The good news is this, that as long as we're above the, let me go back to the chart that I just showed you a few minutes ago. Let's just put back our Fibonacci levels there for a second. So bottom line is that as long as we're above the 61.8% level, okay, as long as we're above the golden ratio level, that's a good sign. Okay, we need to remain above that level to see that buyers still have the edge, buyers still have control. The bad news is this: if Bitcoin, and it's an if Bitcoin falls back below that 61.8% level, if we see this move happening, then that's a bad sign. It means sellers will have regained control. But again, let's just mention this one more time. As long as we're above the 61.8% fib level there, the path of least resistance for the moment is with the buyers. All right, and we really need to see Bitcoin getting above that 9,250 to 10,000 level there. You know, it's only if we can get above that level that we can have some more confidence that buyers are in control and going to push it back higher. But look, as far as I'm concerned, the technical picture, the chart picture on Bitcoin right now is great. It's still looking good. Nothing has changed in my videos since the last video I made. So again, remember guys, less is more. All right guys, I hope this video has helped, and if it has helped, then please give it a thumbs up, and also please remember to subscribe to our channel so you don't miss our updates on the Bitcoin and crypto markets. Thanks very much indeed, and bye for now.